before we went public in 2013. We were a private part of a UK organization, but we were much smaller. And then obviously we've had a lot of growth in the public markets. But this deal is intended to, provide the opportunity to build upon what Taylor Morrison has accomplished. Berkshire buys companies because they believe in them and they want them to continue to what they do and what they do so well. But I think, Romaine, this is like home building history because we're joining, to your point, one of the most reputable companies in the world. A company is going to back us fully. And I think what's center for them is home ownership remains central to the American dream. And this acquisition, when you combine the Berkshire Builder Group, Clayton Properties Group, and Taylor Morrison, it will allow us to serve the market even better.
Well, that's what I'm curious about. What does this sort of scale, if you will, provide that you didn't have necessarily before? Are there sort of economic efficiencies that come along with it? Is it marketing? Is it geographical footprint? What?
Yes, all of the above, for sure. I mean, we have believed in the benefits of scale for years and years, and that's been part of the reason you've seen such, significant growth from Taylor Morrison over the years. It's something that I've had the opportunity to work with my board on for the last dozen years. But, I remember a time, maybe 20 years ago, that it was all about local scale. And today, I would argue, with the public builders, controlling close to, doubling their control of the marketplace over the last 10 years, that it's really changed. It's evolved where local scale matters, regional scale matters, and certainly national. So there's some significant financial advantages to scale. Then if you look at our new geographic footprint, we really do cover most of the entire map. And then you take leadership from two groups that have had such a wonderful success, history, and bring them together. And I think you bring these teams together and people really will make the difference. And then lastly, I'd mention the portfolio of brands, Romaine. I mean, today we serve first-time buyers, first move-up, second move-up. We serve renters with our Yardley brand, and we serve resort lifestyle with our Esplanade brand. And then you look at Clayton's suite of brands as well. And what we have to do is decide how do we bring all those brands together for a single platform.
Is the mandate, though, that's coming from Greg Abel and the other executives at the top of Berkshire, is it to increase market share for Taylor Morrison, Clayton, or is it something else?
Absolutely. Once again, scale matters. And it's not just big for big's sake. It's big so that we can provide a quality product at the right price and fulfill more Americans' home ownership dreams. But scale matters. And ideally, I think we would love to see ourselves as a top 3 builder in every market we do business in. So we've got a lot of runway.
Well, let's set aside the deal for a second and talk a little bit more about the housing market. I mean, you kind of have had, Taylor Morrison at least, had for years sort of this barbell approach. You were kind of at the high end, but you also did things that were on the a more affordable side of the market. But your average home price sales, at least based on your last public earnings reports, I mean, it was relatively high. I think it was over 600,000. So, I mean, that definitely puts you into a premium category. Do you want to be all things to all people, or do you want to pick a lane?
Well, given the scale of the business, I think we have to. I don't think we can ever be all things to all people. For example, we're not a custom builder, Romaine, but we do believe we can successfully serve many consumer cohorts. You have to understand with every single community you open who your primary consumer is. And if you get that right, the financial benefits of that are quite significant. But I do think we can serve the first-time buyer, which Clayton Group does for about half of their business today. And for us, I would say it's been about 25%. But then that first, second move-up buyer. And the resort lifestyle, our Esplanade business is very different. That's appealing to the 50-plus buyer with very significant, I would say, high-end amenities and a concierge service lifestyle. And so you have to have the people in place to be able to understand those differences in buyer groups because it's not just build them and hope the right folks come. It's really understanding your consumer as you buy the land. And so you make sure that you put the right product correctly appointed on it to really assure your success.
I mean, overall, though, I mean, we're talking about a housing market that's been under a lot of strain, partly because of affordability issues,
Yes.
lack of inventory, higher mortgage rates itself. You aren't, of course, immune from that at Taylor Morrison before the deal. Were you starting to see any sort of improvements? I know we never got your official quarterly report because of the closing of this deal, but were you starting to see any sort of improvements on a month-to-month sequential basis in terms of closings, traffic, et cetera?
We've, as you know, there's been volatility in the industry on and off for the last 12 to 24 months, and each month was a little different. I was highly encouraged by last week's sales data. And I think every market tells a little bit different story, but certainly we are seeing stability in a number of markets and some green shoots in others. Now, a month or two, Romaine, does not make a trend. And I understand some of the macro effects the consumer is dealing with today, things like the war, interest rates, to your point. Affordability is real in this country, and it's not going to be fixed overnight. So we have to be very strategic in where we build and what we build to really accommodate our customers. And I also have a great deal of confidence in our financial services team that's able to meet with every customer and help understand how do we help them achieve home ownership, because every customer has a different set of needs, and we can't paint these incentives like peanut butter across all consumers. Some we're going to help a little bit with how they get their down payment. Some it's going to be what's the interest rate. Some it's going to be I'm more concerned about having consistency for the next 20 years.
Yeah.
And so by really meeting and understanding individual customer needs, we're going to continue to help them with some of these affordable challenges that are real in our country today.
What about the Yardley business then? Sort of the build to rent sort of side of the equation. Does that become maybe a little bit more important given some of the affordability issues and the fact there are a lot of people that either can't buy, and let's just be honest, there are a lot of people that don't necessarily want to buy?
Well, you're exactly right. In the Yardley business we've had for a number of years, and you're right, that was really our play on that most affordable market, or the first time buyer that was trying to get ready. But in the meantime, we could build a relationship with them, put them into one of our Yardley communities. And they're horizontal apartments. And so it has a very different feeling. And honestly, what we've seen with our buyers, our renters, it's just as much about flexibility as it is monthly payment. But they may not have their down payment ready, so they may be waiting for the next 12 months to rent. Or it just might be because they're traveling a lot with their job. We're seeing an interesting group of renters, very focused on kind of that millennial consumer. And some of it for them is more about timing, but then also the boomer. And this is choice. This is not about affordability, because this is still within our Yardley communities. It's still very much about a lifestyle and sense of community. But I'm very excited. As you know, we've seen a flood of multifamily inventory hit the markets over the last 12, 24 months. We're going to see that really change, I think, as we look forward in the next 12 months. And the type of product and communities that we're building with Yardley really set us.
So Sheryl, I am curious just about your own costs, your own affordability, if you will, whether it's, land, lots, labor, materials. I mean, what is kind of the status right now of getting those things maybe under control, or are we just at this new normal of elevation in all those areas?
I think it's a little bit of both, to be honest, Romaine. I think there is a new normal for our country on what percentage of people's income people can afford, will spend on housing. If you look across the world, we tend to be one of the lowest. But having said that, I think given what you've seen over the last couple of years, I think the builders have done a really nice job on working with our trade partners to make sure that the products we select, the sourcing allows us to bring more product to market a little bit more affordable, because land isn't getting cheaper. We've seen, I would tell you, over the last couple of years, we've certainly seen some improvement in maybe terms and taking down the land over time. but not significant movement in price. They're not making more of it. And so that's why we have really focused on core locations near employment, near services, near schools, transportation, because honestly, that's a little bit of a different consumer and not stay a little bit out of the knife fight of what I would say are the more fringe locations.